Hello and welcome to season 3 of Financial Secrets Revealed. My name is Amanda Cassar, and for season 3, we are going to be meeting the experts. We will be talking to people who arrange socially conscious investments. We will be interviewing a former Olympic swimmer who is now the head of a large Australian bond company. We talk to a financial advisor to see how advisors can actually add value. We also discuss ETFs, contrarian investing. So I hope you enjoyed doing this deep dive with me into meeting the experts and learning a lot more about investing. Hello and welcome back to season 3 of Financial Secrets Revealed, where we are meeting the experts. Today we are joined by Dr. Renée Baker from the RBI Group based in Florida. Welcome to the show, Renée.
Hi, Amanda. Thank you so much for having me. I'm looking forward to our conversation.
Yeah, fantastic. Now, what I love about your history and why I wanted you on the show is because you combine both the academic with practical, real world experience as an entrepreneur and also an academic. So, can you tell us about the 3 decades you've spent in corporate and as an entrepreneur and why you're so passionate about financial literacy?
I was in kindergarten when I started in the industry. So I started very young. So yeah,
Brilliant.
so it was really hard being 5 years old, getting started in the industry, but here we are. And the journey to where I sit today, from being in corporate and then becoming an entrepreneur, and in the middle, sandwich between that, having this academic component is really interesting. But the reason that I got into finance in the first place was I really fell into it. My career counselor, when I was in college, when I was an undergrad, suggested, initially I was a biology major, and they suggested, because I was too attached to the people, that I would consider a career in finance because I was so good in math and science. And when they say I was too attached to the people, not to be weird or anything, but when we worked with the cadavers, being really wanting to understand their story. Like, I'm very relationship driven, and even at that age, I wanted to really understand their stories. So I said, you know what, okay, not really knowing any better, looking back at that guidance now, my entire career has been really focused on people. So I went into this amazing career in finance and had such a wonderful experience. That experience has taken me in roles in New York. Had opportunity to work in the Cayman Islands, in London, and I went to school to get my doctorate actually through an executive program, an early executive doctoral program, way before some of the newer programs that are out today were available. So juggling that, and I went to in person, in class, went to class and juggled that with the demands of my role. That to me was a bridge to the work that was being done in corporate America, and some of the scholarly work and the research that I found to be very fascinating for the career field that I was in, within financial services. So being able to be a scholarly practitioner and actually apply the learnings from the research to the work, I found to be fascinating, and it enhanced the work that I do. And I was able to bring that to the university classroom where I've taught as an adjunct professor, really helping the students get a real world experience and balance that. And then 6 months ago, I decided to make the boldest move of all and leave my corporate role voluntarily, I like to say, and make the boldest move and move into this world of entrepreneurship, which has its high highs, its low lows, and everything in between. But it has certainly been quite a risk, and leveraging the experience. And I might be a new entrepreneur, but I've been in the industry for quite some time. So being able to have that expertise, experience, and relationships and network, and applying that to this entrepreneurial journey is quite a case study in and of itself. But I've enjoyed the journey thus far.
So that's a big bold leap that I know lots of people probably, in that corporate world, they may get sick of it and think, I'd love to do something else. To actually take that leap when you've got a really good income to pursue a passion, what sort of things do you need to know? Because, lots of businesses fail within their first 12 to 24 months. You know, they may be very good at their job, but not so great at business. How do you work out what do I need to make ends meet? How much money? Like, how do you cut the cord and
Mhm.
start the entrepreneurship role?
Yeah, and that's a great question, and certainly one that, and having worked with so many entrepreneurs over my career, I think it's before the money. I think it's before the strategy and the plan. It's the internal work. Whether or not I think entrepreneurship. First of all, I don't think entrepreneurship is for everyone, but it's for the right person, and that's an internal job. And way before I decided to explore the world of entrepreneurship, I had to do the internal work. I had to make sure that I knew what my why and what was driving me to do that, because time is definitely, it's not always easy. Nothing worth having is, but it really required me to look internal and say, why do I want to do this? And what am I willing to it's not, I don't look at it as a risk, and what am I willing to deal with in order to pursue this. And so that for me was looking at my personal values and my life vision first, and wanting to have a more profound impact in the realm of financial education, is which where I'm focused. I wanted to build a legacy. I also wanted to look at generational wealth and what it required to do that. And I am a person who, I don't mind taking risks. I don't mind doing things. One thing I recognize is that there are many people who have died with their dreams, and I've experienced a lot of loss in life. And it was something nagging for me to say, if I've been wanting to do this for so long, what's stopping me? Is it the golden handcuffs? Is it fear? Because everything we want can be on the other side of fear. So I've said to people, wait before you start thinking about the plan, which I think is important. Wait before you start thinking about the money, which I know that it will come. Are you willing to do the work and be, I think there's a quote, and I'm not even going to attempt it because I'm going to screw it up, but are you willing to do what no one else does to get what no one else gets? And I was willing to make that risk, and my family was willing to work with me on that. My husband is very supportive, because it's not easy. And for some people, I think the going gets hard because entrepreneurs, I know successful entrepreneurs who started with very limited money, and I know entrepreneurs who had a ton of money and lost it. I think that, leveraging your network. I will listen. I don't like to learn everything hard. I've learned some hard lessons. I've heard enough of learning hard. So I listen. I definitely tap into my network. I'm also one who, you have to give things time. It takes time to build. The other day someone called me, and my company has been around for 4 months and this time that we're recording. And they said, well, are you still doing it? It's only been 4 months. Like, who says that? But we have to give things time to cultivate. And I think most businesses fail within the first year. Yeah, there are financial issues and that sort of thing, but how many no's can you handle? How many, people don't answer the phone calls in the same way that they did when I was in corporate. I don't have as much to give when the brand is RBI versus when it was my prior or any other firms that I work with. Are you willing to do the hard work to get there? And I truly believe, I mean, no matter where this ends up, I hope that it lasts forever, and I hope that this builds the legacy I want, but I'm here for the journey. I know exactly what I've gotten into, and my why, and while I may not know what's between the beginning and wherever end is for me, I know my why, and that's where I started, and I'm looking at this as something that's gonna have high highs, low lows, everything in between, and I think entrepreneurs really need to recognize the business part of it, but it's the mental. There's a lot of mental gymnastics that goes with this journey. And that's what I would say, really thinking about what you want and what you're willing to sacrifice to get it. So that's where I started. And the money and the I mean, I worked in financial services, and I'm a person who had side hustles. I had many businesses, small businesses, before I took this leap publicly, to start this journey. But I think everyone's path is different.
So, given that most entrepreneurs fail because they haven't considered the financial aspects, they may be very good at what they do, but they don't know how to manage that financial side of it. It's not something they've ever had to do. What sort of advice would you give them? I mean, do they need to learn about a break even analysis, how to do the books? Is it better to outsource the books? What sort of startup advice could you give to those who are going, it's time, I want to do it, I've got the mindset, I've got the drive, what next?
Yeah, that's a huge consideration, and we cannot minimize that at all. And understanding the financial risk is also important. But I think we don't always have to know everything. Some people are just really good at what they're good at. And also as a mindset thing about money, and are you creating a job for yourself, or are you building a company? Those are two very different things. But when you think about having a solid financial foundation, before taking the leap, I did ensure that I had a robust safety net. I diversified my income. I look at my business as an investment. So I diversified my business strategies in the multiple businesses that I have, to help to mitigate those risks. So while we're building RBI, there are other companies that people may not see that is helping to do that. I certainly always have believed, even when I worked in corporate, to have multiple streams of income. And there's continuous education and never stopping to learn and staying abreast of what's happening in your industry, staying abreast of the financial trends that could impact your business is also key. And outsourcing, we don't need to know everything. There are some parts of my business that I just do not I don't want to know. I don't like to know. I don't enjoy it. And I rather spend my time where I'm going to be able to best serve this company rather than focusing and trying to be something that I really don't have the capacity to be. So I think that that's really important, education, getting, and also having mentorship and a clear financial plan.
Yeah, great. You've covered a lot of bases there. So now that you've got the
Mhm.
benefit of hindsight, where you can look back to where you started, yeah, you had a safety net, you had support, all that stuff. Is there anything you would have done differently or that came unglued that you weren't prepared for? Any sort of lessons, even though we're quite early into the process, that you've already learnt from?
Yes, there's been so many lessons. This has been, Amanda, this has been a master class in lessons, right? I can write a book on the lessons, even in the last 4 months. And I'm not saying I wasn't strategic. So let me just be clear. But I definitely jumped in, and I tend to be more of a, I don't like to admit that I'm a perfectionist, but I tend to be a little bit of a perfectionist. And I didn't have a conservative initial approach. So I think taking some incremental steps before making some financial commitments is important. I also think that one of the lessons that I did learn, I really wanted to spend time focusing on process and making sure we were process driven. And I have a very corporate mindset, which could be very different from an entrepreneurial mindset, because it wasn't for me about the hustle, hustle, hustle. It was about, do we have a strong foundation? Are we investing in the right technologies? Are we looking at tools that are going to be essential to running our business? But I definitely had to learn no, no, I have to say no more. I've learned that. By 4 months, I've learned no. I who I was and what I could do and how I spent my time and who I committed to before. I didn't have the capacity to do it, and I wanted to maintain it all, and I couldn't. The other part of it is just making sure that I was more clear on the vision. And I think in the early days, you're going to have this discovery phase that you're going to be in. But I would say, yeah, definitely looking at that preparation and that strategy is really key. And for some people like me, it was all in. It was get in, fail fast, move on. Where for some people, they might want to take a more conservative initial approach. But I think that is important. It's going to be different for everyone.
Yeah, you made a really good point there, and I do just want to say, I learned from Oprah, "No is a complete sentence," so
Yeah.
that's a really
Yeah.
good
Yeah.
takeaway. So,
Yeah.
say, Joe Blogg's the plumber. He's worked for Fred all his life. He's like, Fred's not really great at this. I can become, a really great plumber and start my own company. I'm gonna, get my van signed. I've got my tools. I'm ready to go. And you're talking about, are you just creating a job, or do you want this self-managing company? And it may be a journey. I mean, you're not going to come out and go, right, I'm buying 5 vans, getting them, signed up, and I just need to find people. So at the start, it may be you're creating this job, but to use terms that Dan Sullivan and strategic coach use quite often is, are you wanting to build a self-managing company where, you are making yourself redundant and the company still carries on without you,
That's right.
versus, yeah, I just want, I'm still a one man band who's out doing the plumbing from the, 40 hours a week, and I don't have to worry about Fred anymore. So, what sort of
Right.
steps do we need to look at to go from, I'm building this job just so I don't have to work for the man, to actually, I want to become an entrepreneur and make this a business? What's the difference?
Yeah, and I think from what I will say is from my perspective, right, early in this journey, I had the financial means to be able to take my time, to be able to build the processes, to be able to think about how I want this business to work and giving myself the time that it takes to learn, to adjust, to adapt, to refine. It's not I great I'm very fortunate, don't have the pressure to just only focus on when okay, I'm going to make this money, I'm going to make this money. So that's why everyone doesn't always have that cushion to be able to get into building, taking the time from their job to building a job to creating a business, because a lot of some folks have created businesses because they had to. I wanted to. So I think that that's the difference. I wanted to do this journey, and I felt that I had more time to. I could always get another title, but I didn't want to get another job. But I think surrounding yourself with a network, getting mentors, having individuals around you to help inform you. We don't know what we don't know, and we think just because we started a company or we're building a business or a job, whatever it is, that we have to know it all. We don't. And I'll be the first one. I don't. I have no problems picking up the phone and asking questions. And that was something that in the beginning, I was a little bit hesitant about, because I thought, well, if I'm asking too many questions, or if I'm going to, are people going to think, oh, Renee doesn't know what she's doing despite having this experience? But you kind of get, the ego goes away pretty quickly. And picking up the phone and asking people, getting that network and having those mentors who have done it to be able to help. But I do think it's really is important to have a strategy, have a plan, have a vision. What are you looking to achieve? And Amanda, I might have a very different answer in a year from now, or 2 years from now, or five
Yeah,
years from now.
absolutely.
But in this moment, what I know for sure is that building a business happens one step at a time. It happens one, I wouldn't even say day, because within a day, a million things happen. I would say one moment at a time, one transaction at a time, one client at a time. It is happening. This is a journey. This is not something that is going to happen overnight, and I knew that from the beginning. But I do think that the entrepreneurs that I've met, that I learned from entrepreneurs that have failed, and I've learned from those that are successful. I start by building a strong foundation, and that's what is really important. Are my values aligned to this business? Am I thinking about it long term? Uh, it's easy to get into the books and the business, but this is that academic part of me that says we have to test, we have to research and really understand what we're doing before we just jump into it. And something that works for someone else may not necessarily work for me, but what can I learn from it that applies it to my business?
Yeah, I think that gift of time, if you give yourself that to, and pick people's brains who've done it, is probably a really
Yes.
good advice for someone looking to cut that cord. And once people have gone in, they've started, they've muddled through the first few years, they're going okay. They start thinking about, well, maybe down the track, this business can be my retirement nest egg. Right now, I'm investing back in the business. I don't have money to put into my pension funds or my 401k. It's all sort of suffering. But maybe if I sell the business, that can be my retirement nest egg. How can we start to maximize those kind of strategies if we want to build a business that we can sell at the end? What other things do we then need to consider for that exit strategy?
I love this question because that's some of the businesses that I've invested in before I started in entrepreneurship. I had to understand the components of a deal. I don't watch a lot of TV. I never been a big one to watch TV. I do read a lot of books, and I do watch a lot of, I love YouTube, so read a lot I watch a lot of YouTube videos. But I think understand the components of a deal and value. When something is not working, it's, okay, is this valuable? Are we Sometimes we have an opinion of what we think the value of our company, even the value of ourselves sometimes, we think it's much higher than what other people see. So, do you understand the valuation of your company? Do you understand the various components of the structure of a deal? I've invested in businesses that have really strong focus on cash flow, and they may sell and they may be undervalued that company. Or there have been companies that I've looked at or other investments that I'm looking to make where they completely overvalued. When we focus so much on revenue, I focus on cash flow. I think about cash flow generation. If I want to sell this business, and someone might be listening and be like, "Yeah, whatever." But for me, I think it has to be something I'm going to, if I'm going to sell this company or if I'm going to buy a company, what am I going to get out of it? And if I'm able to generate a steady stream of cash flow and I can showcase that there is cash flow and you are going to make money continuously if you buy this business, I think then I'll have something more valuable to buy. So are we focusing on cash flow, revenue, profitability, and value? And are we adapting our business to be able to adjust to the changing dynamic of the economy, of the world, of the industry that we're in? And I don't claim to be an expert, but I do know what I know from my experiences. And although I did work in corporate, there are multiple businesses that I own today that have cash flow that allow me the ability to make the decision that I've made and have given me the ability to continue to move forward. And I will say, someone will like, it is none of your business until I say that this is your business to worry about. But what I do think is important is for people to be thinking about the value and making sure that that business is going to be valuable for someone else.
Yeah. You we've spoken, I suppose, a lot of jargon. We've talked about, break
Mhm.
even analysis and profit and loss and revenue versus cash flow, which for some people is just everyday speak. For others, it's another language. Do you
Yeah.
put this all under a basic form of financial literacy? And if it is, why do you think, everyone should be able to understand this? Why is it so crucial?
Yeah, I think I don't always, there are different levels, right? You and I can have this conversation. There are people, like you said, who are listening that are like, "What are you talking about?" And Google is your friend. If you are listening, you have no idea. This Google is your friend. But when it comes to financial literacy or financial education, it's just the ability to really understand and effectively use those basic financial skills. It's personal financial management, it's the budgeting, it's the investing, it's the savings, it's the debt, it's understanding debt. Those to me are those foundational principles when it comes to personal finance that everyone should know. And no matter how many times, this is not new. I did not create this. This is not a new phenomenon. There are many books out there. There's so much information, but yet this is something that people are may not be focused on, or it can be intimidating. I really try to meet people where they're at when I talk about financial education. I talk to individuals. I'm really focused on disrupting the status quo when it comes to financial education. The closing the gender and racial wealth gap is really important to me as a person. And I think financial literacy, financial education can be a cornerstone to individual empowerment and help people make informed decisions about their money, whether how they make their money and how they spend their money. And just because someone makes a lot of money or may be a higher income earner, that doesn't always mean that they have the understanding of financial literacy. And it also doesn't mean that they're wealthy. Because I can tell you, there are many people who will say, well, how did you just leave your job and do these things? I don't have a boat. There are many things that I have chosen to not focus on so that I can create the life that I want. And that can be a significant concern for many. But to round out to your question, I think it's just important for people to be empowered when it comes to their finances so that they can make the informed choices about their money and then ultimately choose to live the life that they desire and not have their lives be dictated by someone else.
Yeah, it's funny. I know some very poor doctors who make over 800,000 a year, but they're so invested in the toys and the debt
Right.
that they don't have wealth. So debt is a word that frightens many people. We've heard
Mhm.
things like good and bad debt, where good debt makes you money and bad debt takes away, and they're depreciating assets. Do you have a personal philosophy on debt management yourself? And for people who
Mhm.
are struggling at the moment, and look, America's no different to the rest of the developed world, where debt money's been cheap for quite a few years, and all of a sudden our interest rates have tripled and it's not so easy anymore. What are
Right.
some steps to be able to come out the other side of what might be a problem for us right now?
Right. But I look at debt as a tool. I think that, when people hear debt, they get so, it's a concern. And I'm not discounting the fact that it is a concern. But debt can be used as a tool. In our industry, we call it leverage. So understanding the difference, like you were talking about, good debt. I think a mortgage could be a good debt. I used to say student loans. I'm going to change that because we have a whole student loan problem here in America. The bad debt, like high interest credit cards, and when you go to the store and you're buying a pair of shoes, that in that moment you must have those shoes. And I have been that person. I love me a good pair of shoes. But how much does that, what are the true costs of that purchase for having a high interest credit card debt? And then for people who are listening, do you know your interest rate for your credit card companies, especially now? Because variable rates change. And I have to keep on top of my credit cards and making sure I like to pay off my balances every month. But if you're going to have debt, do you know how to use it to your benefit versus using it for things that don't matter? Do you need to have a bunch of toys, as we were talking about earlier? Or can you use debt to buy a company that's going to give you cash flow? I was having a conversation with a friend who had set aside a amount of money for a car that they wanted, a dream car that they wanted. Instead, that person took that money that for that car that they were going to buy cash, straight cash, and then they applied that to an investment. And now from that, now they have an asset versus a liability. So I always tell people, look at your prior, if you have debt, that doesn't mean it's the end of the world, but prioritize, pay off that high interest debt first. Every extra payment over your minimum is a good thing. And now what we have, you can see how long it will take you to pay off a credit card if you only pay the minimum. And for some of us that are in this industry, it may seem like it's fundamental or it's basic, but that is really important for people to understand. Even $10 more, any amount over that initial payment can get applied to the principal to pay it down. And creating a budget. People do not like the B word. The B word is a bad word for people. When I say that, I am talking about budget. But having a budget and sticking to it. And I have my personal philosophy around budgeting is I don't care how much money you make. You need to understand and how much money you're spending and how much money you're keeping. Because, like you said, we both know people who are very high income earners who are laden with debt, who do not have significant investments, who cannot afford to do anything if they didn't have that level of income because they haven't prioritized having a budget. Now, sometimes I think we all splurge once in a while, but I do think it's critical at a minimum to have a budget and stick to it.
one of the other foundations of financial literacy that many people believe, if you've got the money to set aside, is to have an emergency fund. When people are struggling to make ends meet week to week, that can be a pipe dream. So,
Right.
if do you think it's really, really necessary, and is there a right amount that we should go, look, I need, is it per $1,000, is it so many weeks or months worth of income? Where's it all come down to in this emergency fund, or whether you call it an adventure plan or something like that? How do you figure it out?
Yeah, my emergency funds I think are essential to just having the financial security in the case of unforeseen situations, and it happens to the best of us. I believe that everyone's amount should be different. It used to be a general rule, used to be 3 to 6 months. I think it should be 6 to 12 months now of living expenses that you can base. It could be any variation of individual circumstances. But I think the more you have saved, and that just because that money is there, that doesn't mean that that's money for you to go splurge. I just believe that 6 to 12 months is a safer buffer now, given what the economy, given some of the uncertainty that is ahead. Also, it may take people longer times if they have lost job. I have a lot of friends, especially if they're high income earners, it may take them longer to get a job. So I think just having that cushion to be able to prepare for unforeseen circumstances. And remember, we prepare for things when they're not happening. We don't wait until we hear that our company is about to have a layoff or when the economy is going to go south, or COVID came up on us very suddenly. None of us really expected it, right? So when that happened, for those that had an emergency fund, it was much easier for them to maintain. And listen, let's be clear, this isn't a reality for everyone. Some people are struggling to make ends meet. Some people are struggling for childcare and are living paycheck to paycheck, and that is a very real reality for many Americans and people, especially where I live. But one thing is that I always say is do the best you can. If it I remember starting in my early days, I remember starting with just $10 a week. $10 a week and just putting $10 a week aside. I wasn't missing it. I took it out of my paycheck right away. $10 a week, because I didn't grow up talking about money, but I remember someone coming into one of my classrooms. It was a financial advisor, who came into the classroom and was telling us about how the more money we make, the more money we spend. And that with the lessons that they wish that they knew in their teens and 20s, as they were in their 30s at the time, here's the lessons they wish they knew. And like many things, people don't listen. So I think we just start small and build from there. And no matter where we are in our lives, I still think that we can try to look for ways to save money and or look for ways to increase our income. For me, increasing my income meant that, when I went to school, getting some licenses, getting some certifications, moving positions. But there's a lot of real challenges in the world that I don't discount. So, but when it comes to an emergency fund, I just think having that can really help. Even we start with getting to $1,000 will help you when situations come up that are out of our control, and we all have them.
Yeah, look, whether the fridge blows up or the car needs new tires, I mean, there's always something going to happen that's going to blindside us when we least expect it to. And yeah, having that little bit extra can just take the pressure off, can't it? So one of the other
Yeah.
things is, once we've got that bit aside or we want to start doing some investments, where do we start? I mean, there's so much information out there. We've got robo advice, we've got financial advisors, we've got Dr. Google who can fix everything, we've got Chat GPT who can put together a portfolio. Where do we go to be able to work out all the options? And then on top of that, now there's scams. So,
Oh,
how can we both protect ourselves and negotiate the world of investments as well? Because there's some seriously smart people who are still getting caught up in scams. They're just getting cleverer and cleverer.
yeah, they are getting quite clever. It's quite frightening, for watching some of these scams. But I think the same rule of thumb applies Now, but it always applies. If it's too good to be true, it probably is. And people can be inherently greedy and like, well, this seems like a really good opportunity. And people, the scammers are getting better. So do your due diligence, do your research, buyer beware. But I think if you understand some of the fundamentals and start with your goals, I'm always going to say start with you. What are your goals? What do you want to accomplish? What is your risk tolerance? What do you want to accomplish before you start investing? I also think it's really important to pay down some of those high interest rate credit cards, pay down some debt before you start throwing money at stocks and mutual funds. I think that's important. That's just me. But hopefully, if you're working at a company and you have 401k and you have the ability to invest in a 401k or do something like that, I think that that's a good thing to do. I'm always going to go to getting educated, having the education, and that education can happen from reading. It can happen. I'm not going to tell people to go, be careful where you get your financial advice. There are many trained professionals, financial advisors, wealth managers, whatever it is that you want to call, that are here to help. And you don't, if you don't know, it's best to work with a professional at a reputable company that's going to help you. And I didn't grow up talking about money. It wasn't something that I knew about. And I used to think, well, I can't afford to work with a financial advisor. I can't afford to invest. But there are financial advisors that are every stage of their life, just like we have people that are every stage of their wealth journey. So for me, what I did was I started one putting money in and saving it. Then I started to invest in mutual funds early on. For me, utilizing dollar cost averaging, which meant I had a set amount that I would apply to the mutual fund each month. That way, I had access to a diversified portfolio that was managed by someone else. I looked for low fees because fees could be a challenge for people. And I started small and took my time. Again, people love short term fixes, they love a solution that happens right away. This is a long game. So if you think about investing as a long game and not look at your portfolio every day, and just because the Dow, you're on the news, like the stock market took a hit, you're thinking, oh no, I'm gonna lose everything. Just calm down. The stock market is here. It's been around for longer than it's been around for a long time. There's a lot of us tied to it. But I think working with a trained professional is always going to be a great opportunity if you can do that, or if you're willing to do it. And a reputable company, a reputable advisor. And there's many ways that you can check the reputation and background of a financial advisor. In America, we have broker check. But I think that, diversifying your investments, thinking about what works for you, we might see something working really well for someone else and think, well, I want to do that. I want to see that. But people only see what we want them to see. They don't see the challenges, the risk tolerance. They don't know their personal situation. That's why I always say seek guidance from a financial professional, look for mentors before exploring anything that's more complex. And just because it works for someone else, it doesn't necessarily mean that it will work for you. So look at what works for you.
Yeah, there's some great sites out there now in Australia. We've got one called Advisor Ratings. I know the UK has a similar thing where, you can look up an advisor, the Financial Planning Association. There's those style of ethics bodies in most countries now that are developed and have, a formal registered list of financial advisors who have to meet certain education criteria. And for those who still think it might be out of reach, you've mentioned, big reputable companies who've been around for a long time. We could roll off like the Vanguards or the BlackRocks, or, companies that are there that offer perhaps some online training for free where you can learn. I know the Australian Stock Exchange has free courses for people who want to learn about the share market. So there's a lot of information out there if you stick with the big reputable companies that can help you to get a foot in the door, basically, to get started. So Renee, thank you so much for your insights.
Yeah, no, thank you for that. And I just wanted to mention one more thing. I think it's a really strong point that there are so many educational tools and resources from reputable companies out there. I'm going to mention the RBI group as being one of them that has the information and the tools and resources to help people understand the fundamentals of financial education before they make investment decisions. And Google is your friend, but we have to take action and want to educate ourselves and be empowered when it comes to understanding and being literate when it comes to finance. And I've been changing the framework, but I'll say being powered when it comes to understanding our financial journey and taking control of our financial futures. There's so much going on in the world that is out of our control, but what is in our control is our ability to be educated and seek to understand how our finances are going to impact our lives in the short term and long term.
Yeah, brilliant. And look, I will have all the links to the RBI group in the show notes. Is it information that is just relevant to an American audience, Renee, or is it basic financial literacy that globally people can come to you and find out more?
Absolutely, Amanda. I know when it comes to financial education, that there are fundamentals, there are nuances from different countries, but the fundamentals are going to be the same. The conversations that you and I had are aligned when it comes to understanding and have a budget, no matter where we are. But so a lot of those tools and resources are fundamentals and are fundamental, foundational, international. I like to say that R in RBI is international.
Again, thank you so much for sharing with us today, Dr. Renee. It's been lovely to have you on Meet the Experts. Again, if people want to be in touch, I'll have all your contact details in the show notes. And again, Dr. Google, I'm sure, can find you just as quickly. So thanks again, Renee, for sharing.
You, Amanda, and thanks for everything you do to help bring these experts to your listeners and for all your wonderful work.
Thanks again. Take care.
Thanks. Bye.
And that was another episode of Financial Secrets Revealed. Thank you so much for joining me. I hope you got some nuggets of wisdom out of that guest and enjoyed listening to their story. If you'd like to know more, please reach out to me. My contact details are in the show notes, or hunt down your favourite bookstore to find Financial Secrets Revealed and learn more for yourself. I look forward to hearing from you.